Hey, hello, this is Martin from Secret, channel for learning about trading and investing. Welcome to markets. Next week, the weekly stock market analysis show where we look at what happened in the market during the previous week and learn something from it and plan for a better trade for the upcoming weeks. It's starting from March 13th, Monday, tomorrow, 2023. Let's get to the charts. What happened? Weekly charts of Nifty and the Banknifty is what you see here. And we have a wide range bearish candle that is almost engulfed the previous green completely. This is weekly chart we're talking about. And the Banknifty right side, you're seeing it's a dark cloud cover almost, right? Which is a bearish pattern, and it's a wide range bearish candle. And both of them are bear traps or bull traps. I mean, they trap the bulls who are trying to move up. It went above the previous candle's high and then closed below the previous candle's close. So it's a bull trap, trapping the bulls, and bull trap wide range bearish, dark cloud on Banknifty, and encroaching bearishness, heavy bearishness can be seen there on the weekly. Is it a support? Yes, it's probably still there. It's in a support zone. There's a probability it can bounce from here, take support, certain retracement that happened, and then it can move from here. Still possible, but one thing you have to keep in mind, look at the daily charts on the Friday. You're seeing that it's a hammer after a gap down. So this is a bearish kicker pattern. Bearish kicker, it's heavy bearishness is what it's indicating. Both this Banknifty also, it's a kicker, creating a gap there, and that gap would be the major resistance to the upside now. That gap would come to 7600 zones. Then above that 7800 you have the previous high resistance, and so same. So that's heavy bearishness that has happened on Friday. And it's a hammer. Hammer could indicate that there's probably a downside that may be coming. It's a big reversal pattern. There's a possibility that it can bounce from here, but Banknifty is not showing that it's not having a hammer. The bounce up did not work out well. It's wide range bearishness that we see in the Banknifty daily currently on Friday. That's what the chart says. Let's get to the numbers and see. One more thing is Bollinger Bands. Bollinger Bands, you can see that it's expanding on the downside, bearish bias, and expansion downside indicate for the bearishness. Banknifty also below the median is bearish bias, and expansion has just started, although it is not as much expanding on the downside yet on the Bollinger Bands for the Banknifty. But yeah, so that's a downside beginning, about to move for the downs, expand downside. That's what. Now let's summarize this and see what did we lose last week. 1% gone and 2% nearby gone on Banknifty. Right. So if you lost 1%, 188 points and 775 points on a week-to-week basis, and it's a wide range bearish candle, bull trap on both, right? And it's a dark cloud candle on the Banknifty, which is also a heavy bearish pattern, and it's both not close below the 20 weekly moving average, right? That's keeping in 20 and 50 is also in the Nifty, and it's fallen below it's already fallen below. It's still below. It's below the trend line from where the earlier breakout happened. So that's what we are. And daily, what does it say? It's a 1% down and 2% down. Same. Friday alone and weekly also 1 and 2% back. So Friday alone 177 and 777. So the big fall actually happened on Friday with that gap down. That's a problem. And Nifty has lost to 200 DMA supports and Fibonacci 61 retracement support in the last high also is gone. But Banknifty just managed to hold the 200 DMA and Fibonacci 61 as the last hope for the bulls. And lower high has been forming on the short term, and the higher low has been forming on the medium term on the weekly chart. So short term daily charts 17800 is the new swing high that's formed because of the gap down, and 41 and 691 on the Banknifty. That's where the breach of the lower high would happen if price moves only to that, right? And below 255 falling, that would make a new swing low on the Nifty. It's very close to that. It went to 300 below, very close to 300 above. That's what last Friday close was. And SGS closes in the 300 range, so 255 is just 55 points. Making a new swing low on the Nifty is a possibility, and Banknifty is 39600. That's quite down there, because 200 TEM may be in between. The only hope for the bulls, as I said earlier, would be for that to act as support. I already tested that level in the bounce up. It cannot be ruled out. That still a CIP bounce also is possible, because that would have been, again, would act as a support. All the bands, we already seen that it's indicating an expansion beginning in the Banknifty, and expansion already started in the Nifty, and bearish bias, so further expansion downside. So W pattern also is possible. You can see this W, right? W pattern, W, right? If the all the W will happen only after 42 is breached and 7800 is breached. W pattern is also double bottom. The bottom divergence is there if one of the legs of the W is outside and one is inside the Bollinger Bands. So it happens like this. That's a W pattern. That could work out. That's only hope that's left. Bounce up from here is only hope. It's a 200 EMA on the back of the end. So, right. Otherwise, it's all bearishness that price patterns are indicating. Right. Another view. If you're in the Banknifty, this is the trend line that we're talking about. Just close below that. Close below that in both indices, and that's where the key resistance is coming for the Banknifty. Banknifty has been spending around 6 weeks in the same zone, from where the earlier breakout had happened to the all-time high. So that is 6 weeks at the same zone and then break. Still it has not fallen and made a new swing low. If that happens, that means it's down deep, right? So yeah, so 7800 seems to be a place where a lot of time has been spent by the Nifty on the other side, right, on a week basis. That's our view, and support level make a note. So the immediate resistance now would be the gap. It's greater at 17,569 for bear slip drop. That's 961 also confluence of resistance. So it's very crucial that the 17,600 zone is cleared, and above that, 17,652, then Fibonacci 50 gap resistance, another gap resistance at 17,800. So confluence of Fibonacci 50 and the gap resistance. Then you have 79, 34 resistance, and then 18,000, 18,070. That goes. Downside, the first support would be the 17,299, and after that the previous swing low at 255, and then 200 rounding number, and likewise it goes 17,100, 17,000. Support goes. Actually, similarly on the resistance upside would be that gap that is created from Friday's low. Gap down, 41,200 would be the resistance. So in confluence with the previous swing high, rounding number around that 41,100, right? 41,200, clearing that would only mean that we are back on track, right? And 42,000 would really mean that we are in back with the price action also changed from the lower high would be taken out of the Banknifty. Support outside would be 40,500, 40,250, 40,000, Fibonacci 61. So Fibonacci 61 and 200 EMA is not lost, so that's where all eyes will be on Banknifty. That's reasoning to make a new swing low here at and then 39,420 would be the another swing low. So a lot of hopes would be there at the zone where 200 EMA is there, 16 is there, two swing lows, three swing lows are there, right? So breaching 39,400 would mean disastrous on the Banknifty. That happens. Otherwise, we're still sideways, you can say, right, with some bearish bias. So making note of this resistance for the next level. Moving on to study the momentum and the trend analysis, you can see that left side, yeah, I have fixed that. So momentum and the trend, if you're looking at the left side, you have the Nifty 50 and then you have the back to the right side. So weekly charts are showing that it's a sideways momentum, daily charts also sideways. Weekly charts are showing Banknifty sideways, sideways again on the daily also. So short term and medium term, it's all sideways. So it's still not breached into the bearish zones. So momentum, that's what we're talking about, RSI. And one thing you can note is that there is a divergence on the daily on Nifty and the Banknifty. Not divergence, it's a range shift to the momentum. If this momentum is taking a support of the RSI 40, and then there is a probability that it can bounce up from here if it holds that support, the support zone. So that's very bullish pattern. The momentum pattern, momentum range shift concept seen in the Nifty and Banknifty, that's positive. And otherwise, it's sideways on all, and sideways and falling in the daily, and sideways and falling in momentum in the weekly also on both the indices. Right? Now bearishness is there all around. The crossover of the bearishness has happened in the Nifty also in the short term, and we have the ATX indicator that we're using for. So it's in negative zones that we have seen there from the trend indicators point of view. So it's bearish, and it's rising bearishness. There's a Banknifty on the short term after the crossover in the bearish zones. It is a rising strength, right? But rising strength is not there in the Nifty's. Yeah, so that's something that you have to keep in mind, right? So moving ahead, volatility and the opportunity analysis. If you see, the India VIX has spiked 10%, right? It's 13.4, but still meeting the lower regime. So you have to be cautious on that, and you have a short build up on the futures OI for interest we are talking about. March 16th, 2023 weekly expiry options. OI data is showing that 0.71 is the put call ratio. That's closer to bearishness than bullishness. Not bullish enough, I would say. 0.59 is also closer to bearishness. There's a Banknifty. So OI or the options for the next expiry is not that great. So in the bearish side, 17,400 and 18,000 is for the wide, very wide, very wide. The highest put and call writing is seen like that. Second highest put and call writing is at 7,300 and 7,500. So the Nifty. So Banknifty has got 40,500 and 41,000 point range. Comparatively lesser range, and 40,000 and 40,500 is the second highest put and call writing is seen on the Banknifty. Let's see how the sectors performed last week, and how again read from that momentum perspective. So here you have this different sectors. So we can make out that it's definitely down. All of them are down, right? All the sectors, major sectors are down. IT is falling big, and reality also is falling big. Otherwise, other C sectors are kind of all less than 1% moves. IT less than 1%, pharma less than 1%. Bigger than 1% down moves happen only in the reality. And all these sectors that is bearish, clearly is pharma, are still in the sideways momentum. So it's a good thing. So the crops sector fall into the bearishness has not yet happened. That's the same thing that we see here. Right. Left side of the top we have the IT index taking a beating, but still sideways. Metal taking a beating, but maintaining sideways momentum. On the medium term, and auto, it's taking a beating, but sideways. Pharma taking a beating, and it's bearish. So pharma is only sector in trouble. FMCG taking a beating, but still maintaining sideways. Reality maintaining sideways, and not ready to give up that neckline zones, right? Index heavyweights. Now we are analyzing basically the Hritik stocks or the top 7 index constituents, and then trying to see how do they get impacted and then what we can look for them. So HDFC Bank got hit. It's a flyer and Paul pattern. Bullishness had slipped in sideways 2 weeks back, and still that bullishness, that pattern is still bullish, and it's in the bear zone. It's unable to move above. Every day it moves a bit, falls back, but it always takes a support at this zone. So as long as that zone, within that consolidation zone, is not broken with the whole candle downside, we can still hope that it's not that bad, right? But the trend also is not crossed out. So HDFC Bank still showing some bullishness, although it's sideways momentum that we are seeing. HDFC also same. So flag and pole consolidation is what is happening. It's unable. It's going up and down in a very narrow range. Reliance, the wide range, it's sideways, moving up and down. So for several weeks, and momentum is sideways. Infosys is facing resistance, moving up and down in a range. And we have major gap resistance, and now it's heading south towards its support zone. Once again, its TCS had broken out from the trend line and then falling back to the trend line again. Meeting in sideways. ICICI Bank going up and down in that very narrow range and meeting in sideways. Black Bank slipped in the bearish zones in the momentum, but it's basically doing nothing but sideways in that range. So it's all sideways across all the sectors, definitely. Oh yeah, institution participation, how did institutions? So institutions were not selling net to net on a weekly basis. If you see, all of them had less than 2,000 crores of buying and everything. Yeah. So that's, yeah. So there is panic in the market and in the retail participants, but no big buying is coming in. So flattish buying is what you see in the institutions. Right? As long as they're not selling big, they started doing that on Friday. So next week we'll do that. So Friday there was mix of both buying and selling. So that's when net it ended up like this, right? So that's something you have to keep in mind. And Let's now analyze how the global markets go, the global commodities and currency, how they are performing. So dollar index, right? This is what the top chart is. What dollar index is. It was spiking up and trying to break out from that trend line of the cup and handle pattern. Didn't work out, and then it's closing decisive. The flat spike of 0.7. So it had made a point. Yeah, yeah. It, actually, it had spiked up to 0.7 and then closed flat at 0.12. That's what happened. Spiked up. It moved up, but very slightly. Moved up and then pulled back. So it's facing resistance that so that's what 104.63 on the sideways. Used INR currency where it moved up 0.3% up. So what a hammer that is formed. It had a 1.5% dip from the top after facing resistance. So it's in a ascending wedge also in a parallel channel also. So right, very range bound. The range is narrowing. Probably it could break down or break out. Right? So usually 3/4 of the wedge is where the breakout or breakdown happens. So I was trying to move up again after a dip. So there are some symptoms of dollar cooling off and rupee gaining strength last week. So they sustained this week 81.9. It's not that far from the weakest levels of rupee. So that's not very great news from the currency side. More or less maintaining the same as last week. Crude oil is closed 4% down and 76.67 relief. No troubles there so far. Gold is spiking up because well, there's some kind of fears of recession and things like that. People will switch sites and put in more safer havens. That's what is happening. So 26 up, 8% correction had happened earlier. Hit the resistance. This is what gold charts. So it's spiking up in the last 2 weeks. Check up and handle weekly charts we're talking about. Momentum is resisting below 60. But yeah, there is a probability that it can attempt once again to the top of the channel at 1917, that kind of levels. And crude oil, once again, it's fine. It had given 45% of pullback from the top in the last 1 year. And it's not spiking up, it's only relief, as I said earlier, the charts. Crude oil and gold, that's what you see there. The global markets, if you see, not a great picture over there. So, sea of red. Look at the candle height, it's 4 plus percentage of dip that has happened, right? 4% wiped up just 1 week. Momentum is dipping, but still in the sideways. Trend is negative. That's the Dow Jones, and Nasdaq also has taken a dip. And as we found, the broader index also has taken a grip. So net we have 4% down Nasdaq and Dow Jones, and S&P 500 4% down, nearly 4%, 3.6% Nasdaq down. So sideways movement is made it, but bearishness, you know, evident in the US market. So global markets, trouble there. Currency, nothing, no great news. Crude is okay, and gold is spiking when markets have trouble. Two actionables next. For alongside, we have a gain which is consolidating. There is a probability that it can give a good risk reward if there is breakout that's happening from the moment of a spike to the bullish zones, and trend also is spiking and upward strength. Previous level to the short side, head and shoulder pattern. So, rocking the support zones and breach the neckline, and it could give a good downside. Right. Trade the stop losses. Another strategy. This is the Batman strategy that I take often every week on Fridays and then get out before Thursday. Basically, it's selling for RTMs and then having a safe zone in between with less profit and having a zone where it's high selling. So basically, it's a 1-3-2 pattern. So you sell OTM puts on one side and OTM calls on the other side, and there you also buy the hedges at different levels on both sides. So very good probability of profit and the very good range within 16,900 and 835. It's a very nice range, and range is the big advantage of this, and you just have to get out before waiting for the last day. If you want to wait for last day and you're sure that the price there won't be any breakout that happens, you can make more profit. But yeah, I normally get out. I get a wide range. That's a big advantage of that. So it's a Batman strategy on the Nifty options that we're seeing. Now that you've seen a lot of things, now let's wrap up and see what we have, what we had last week, and what we anticipate. So it was a bull trap. All the bulls were trapped last week, and a new lower low, no lower high was formed last week. In the lower low, lower high pattern, new lower high was made, and the momentum trend bearish. All the bands expand downside, right? Closing below this crucial support zone is now acting as resistance, from an earlier breakout habit. So it's a it's a trap for the bulls. Bears have taken control with momentum trend, Bollinger Bands, OI, football ratio, VIX, all of this is negative towards in favor of this. And US does not breed pressure. It's a mother market, and then obviously look at the charts, it gives nothing but a moderate bearish view for the next week. And the only hope for the bulls is for the banks to take support at 200 and not make a new low and retest and bounce from there. So if that happens, then Nifty also may rise up along with that. So it's VIX is spiked up, but still under control, less than 14, so it should be okay. But no, it's in the lower regime and could spike up and get back to the different regime altogether. A lot of uncertainties of global recession fears, some SVB bank collapse, and reverse, what do you call it? The yield reverse, the yield bond yield reverse, inversion, a concept of where the short term interest rates are higher than the long term, which is indicative of a recession. So that kind of worries are all there. So uncertainty is still there, which can spike up. Cautious. If it spikes up above 20, just stay out of the trade or cut 20% size. Right? Crude oil is in okay range. Rupee is still in trouble. And that's the close levels to watch. Downside is 16,650 and 36,800 Texas. And upside 17,800 and 42,000. At least has to be clear before we get think of an up move. Right? As I always say, when there is a dip, there's an opportunity for to buy in small chunks and invest good quality stocks. We can also do with the help of cash secured puts and call calls and all these strategies. So if your direction is clear, then go for spreads, vertical spreads, and if you want to take quality trade money, go for counter spreads. And if you are not clear on the direction, take long directions with wide range. And have hedge positions always when you're taking long directions, so that you know what exactly you lose, and you know that you will be still in the game if there is an overnight risk that plays against you. So that's my wrap up. It's moderate bearish view. Uncertainty is still there, right? Trade safe, play safe. And if you're subscribing this without subscribing, please. And if you're watching this without subscribing, sorry, please subscribe and then share it. Definitely, have very subscription. Appreciate your help in this vlog. Thanks for watching. Happy trading, happy learning. Bye bye.